Good morning, everybody. Welcome to the start of a brand new trading week. It's the 20th of June. We are Signal Centre, Talking Ball. Just me and Steve today. How you doing, Steve?
Yeah, morning, mate. Very well, thank you. Nice,
Glad to
nice,
hear it.
nice weekend. Nice, relaxing weekend, and ready for another week.
Didn't look relaxing, according to your wife's Instagram stories. You was out having it, weren't you?
I was maybe the one sitting down. That we had chairs with us, mate. So
Uh,
she might have been dancing and bopping about.
yeah,
I was sitting down, yeah. So
fair
it's like a
enough.
couple of little bit of events. So it's quite nice, quite relaxed little mini festivals, I suppose we could call them.
Fabulous. Excellent
Enjoyed
stuff.
enjoyed yesterday's one because it was a foodie festival.
Oh, that's always a winner.
Yeah.
Superb. Okay, so let's get stuck into the latest headlines to start the trading week. More chop, I think, probably expected. And if we take a look at what's creating it, we've obviously got continued hawkish Fed rhetoric. In comments on Friday, the Minneapolis Fed president stated that he could back a further 75 basis point increase in the July meeting. So still more to come, it would seem, there in order to get inflation under control and continue to hopefully stimulate the economy. In terms of what's going on with the longer term US yields, they stabilized a little bit. The 10-year traded around 3.23% on Monday. In terms of what's going on with the Eurozone, the peripheral concerns eased slightly. The Euro had drawn an element of support from a narrowing of the Italian-German yield spread to below 200 basis points as immediate fears surrounding fragmentation in the Eurozone bond markets eased slightly. Another ECB member stated that several 50 basis point rate hikes are possible if inflation continues to worsen. In terms of the latest data from the CFTC, traders have switched to euro short positions. There's been a sharp reversal in euro positioning with net short positions now at 6,000 contracts from longs above 50,000 in the previous week. So that's a pretty big shift and will limit the potential for further euro selling. The dollar versus the Japanese yen consolidates just below 24-year highs, so still looking very strong indeed. Take a look at that chart in a moment. And finally, the Bank of England's chief economist Peel stated that the bank was looking at the persistence of inflationary pressures and price pressures becoming embedded in the economy, and that could trigger more aggressive action. So pretty much the same story across the board when it comes to central banks, and that is that we're looking for more aggressive rate hikes in the coming months. So let's get into some charts then, have a look at how price action is shaping up in the early stages of the trading week. Steve, you're going to kick us off with a look at Bitcoin.
Yeah, have a look at Bitcoin. We've broken the solid resistance that was guiding us along nicely on our merry bullish run in Bitcoin, and we've smashed through it, and no comeback whatsoever by the looks of things at the moment. We're now down to the 20,000, trading below. We've traded below that over the weekend. In fact, the low on this chart got down to 17,600. So pretty decent sell-off continued into the weekend. We had a little bit of a pullback over the last few days. Further downside expected on Bitcoin. Potential for a pullback maybe towards the first level of resistance, I would say, if we go down to drive right down to the hourly chart, would be around about 23,000. But the main area of resistance for me would be 28,800. Looks like we're forming a little bit of a bottom on this hourly chart. Nice little head and shoulders, but around in formation. A break above the 20,800 level should see further upside, potentially challenging in that 23,000. But overall, the short term, medium term remains bearish. Further downside expected. So let's see how that pans out over the coming days. Looking at commodities, going to first of all take a look at gold. Last week's gold candle is a bearish outside candle. That's pretty negative for the short-term price action. We see this ABC correction move lower. Further downside again, potentially expected there. Really sort of like based around the dollar strength. Further dollar strengthening expected. Obviously, we've sort of got once the dollar goes stronger, gold pulls back quite aggressively. So that'll be the main driver there. On the daily chart, we remain in this downward channel, not a very clean channel. We had a break here, a little bit of a break here, but no close above there. So as far as we're concerned, we've retested that channel and failed. So potential for further downside. Support below coming in the form of 1788. Below there, we've got 1762, which would be a 78.6% retracement from the August 21 low to the March 22 high. And we can see that we had further horizontal support back around that 1762. So for me, that's the prime target of gold over the coming weeks. Oil has had a considerable move down. A lot of the commodity sector being impacted at the moment. The energy sector having a little bit of a turnaround. We didn't quite get up to the highs that we saw in March, but we stalled around 121.30. That was the sort of level on the WTI crude oil, and downside was seen. And a not really strong bearish day is now retesting this reverse trend line that we've got, which was a previous downward trending resistance line, which broke through on towards the end of May. We're retesting it now. We've got this bullish channel that actually let's adjust it ever so slightly. Won't adjust it because it might mess the chart up, but we're below the 21-day moving average. We are testing the bottom of this upward trending channel, so it is key for price action to hold above this 105 106 level on WTI crude oil. Similar sort of level in Brent crude oil would be around about the 110 level, so a nice round psychological level to watch there. Do you want to take over and have a look at the FX and the indices, Joe?
Yeah, sure.
Excellent.
Let's take a look at FX to start with. Not massive amount of changes really, or any changes really in the dominant trends that we've become accustomed to in the FX space. So let's start off with the dollar index. That still continues to hold in and around these highs. We have seen some choppiness in the last few sessions, but all in all, it still remains well supported, and I don't see there being any major changes taking place on the dollar index at the moment. I mean, it's a very early call, but maybe we are starting to consolidate and forming some sort of rounded top, but I wouldn't be banking on that just at this stage. I need to see a little bit more evidence of that before even considering any sort of speculative short view on the dollar index. If it is to pull back, then we've still got trend support down here around the sort of $100 area, and overall it would still be pretty bullish, and I wouldn't be overly concerned about that. So the outlook remains very strong for now. If we take a look at Euro USD, we can see that that is continuing to hold around this support level here at 103.50-ish. Again, a little bit of chop last week, which indicated there was some interesting or some interest from the bulls. But as we've seen with that data over the weekend, there's been a pretty large shift in the amount of short positions or short contracts that are held in the euro. So that may continue to suppress prices on the upside and for the dominant downtrend to remain active. If we take a look at cable, we can see that there's been a decent bounce from this 78.6% fib level at 120.25, and that's relevant if we go all the way back to the lows that we posted around the pandemic to the recovery highs. We've got this 78.6% level, which has done a pretty good job. Amazingly, these fib levels are pretty great indicators really of where you can see buyers and sellers emerge. So we've seen a very good example of that here on cable. Not really much else I want to go into, I don't think, on the currencies. In fact, we'll just have a quick look at dollar CAD because that hit an interesting level last week. Really strong move higher in the pair, as you can see, but it rallied straight into this previous high that we posted on the 12th of May and was rejected. So a pretty interesting resistance level there. But overall, it still looks for me, following this downtrend here, then this consolidation, that we are going to see higher prices, and I'd be targeting this 50% fib level up here at 133.40. If we take a look at dollar yen, as we spoke about in the show notes, that's close to a 24-year high. No signs of that slowing down. The 130 level was previously highlighted as a point where the Japanese central bank could intervene. We haven't really seen any evidence of that at the moment, and prices continue to move higher, having reached highs of around 135.60. So still looking pretty strong, pretty robust for now, and I would expect to see higher prices. Let's move on to the indices. If we take a look at the Aussie, I'm going to start off with this because, as Steve mentioned, we've seen a little bit of a pullback in some of these commodity prices, and the Australian market is heavily linked to that because a lot of the constituents within the ASX 200 are commodity linked. So as we can see, a really sharp sell-off has taken place over the last couple of weeks or so, and that's pulled back to this 38.2% Fibonacci retracement level. Yet again, another example of Fibonacci levels doing a pretty good job. It's only stalled in a minor way. So if you were scalping or looking for a minor bounce from that level, you may have done okay out of it. I'm not suggesting this is going to start creating any sort of major reversal on the price of the index, but an interesting level to note nonetheless. So that again is from the lows that we posted at the height of the pandemic back in March 2020 up to those highs, and as we can see here, a major band of resistance has formed at those highs, which was failed to be overcome. And since then, we've seen some pretty sharp selling down to this kind of level here. If this fails to hold, then we'd be looking for probably a move into the series of highs around this kind of level here. It's not exact, but there is seems to be a decent level of resistance support there. Sorry, at 6,200, and below that we've got the 50% fib at 6,031. If we take a look next at the US markets, because that's obviously where there's a lot of participation, we have still yet to fill that gap that created last week on the Nasdaq. So when we opened for trading last week on Sunday night on some markets, and then obviously on Monday morning, we created this gap which hasn't been filled, and at the same time we broke down below this 50% Fibonacci retracement level. We also posted a pretty nasty looking engulfing candle on the 16th of June. And prices continue to remain under pressure. The next level we've got on the downside is at 10,500, which is the 61.8% Fibonacci retracement level. I wouldn't be surprised if we did see some consolidating type price action take place over the short term, maybe even fill that gap, but ultimately the pressure remains on the downside, and I would be looking for lower prices on that particular market. And if we look at the S&P 500, still playing out from this head and shoulders top, we've got a big zone of support here highlighted on the chart. First of all, we've got the 50% fib level at 3,500, and then at all the threes, we've got the measured move of this head and shoulders top pattern, which comes in at that kind of region there. So I'm thinking we are coming close to a point where we could get some speculative interest, some buyers jumping back into this market. It may only provide some temporary relief. I'm not sure this is quite the bottom. I don't think we've seen enough in the way of a capitulation move just yet. I mean, although having said that, that move there looks pretty capitulation-like, but I still think there maybe is a little bit more pain, unfortunately, on this market to be seen before we can start calling bottoms. So that's pretty much that. We'll just finish off in the FTSE 100 actually. That has continued to slide lower like the ASX, but not entirely. It is linked to commodity prices. So we saw a huge reversal here in line with commodity prices dipping, and we've stalled just in front of a 78.6% fib level here at 6,958, posting a little bit of a reversal as things stand today, up by 0.75%. We may see a little bit of relief in the short term, but overall prices still remain with a bearish slant for me at the minute. So we're not going to be looking at stocks today because Jamie usually covers those unless there's any requests. I can't see any on the comments at the minute, Steve. So we'll crack on to the next part, unless you've got anything that's caught your eye.
No, just sort of like when we were talking about the S&P sell-off, I was reading a bit today from a company which provides live news, market analysis and unbiased commentary, themarketeer.com, which is like quite a nice play on name on words. They were very much talking. I'll see if I can share it. I'm sure they won't mind. Free advertising and all that.
Yeah,
let me see if I can download
quoted
it.
the source, haven't you?
Yeah, exactly. So this is the sort of stuff they send out. Can you see it on my screen?
Let's share your screen. There you go.
Yeah, it's pretty decent stuff. I sort of like get this in your inbox every morning, so it's pretty good. And it sort of like goes into some finite detail on the technical side of things. Talks about quite a sort of like we're at the highs of a short selling at the moment on S&Ps. Also, it talks about the current bear market sell-off has been more severe than the average. So that's not looking great. S&P 500 performance during 20% drawdowns since 1950. This has been one of the most aggressive. Doesn't feel like it, does it, Joe?
It doesn't, and I don't know why that is. I mean, it's pretty savage out there, isn't it?
Yeah,
Even looking at things like your traditional sort of 60-40 portfolios, I read about a bit about that as well. So typically, investors would have 60% in equities, 40% in bonds, and that's had its worst performance, monthly performance for forever,
yeah,
by the looks of things. So
yeah.
you've got typical, safer ways of investing blowing up, but it doesn't feel like that at the minute. I
No, I
don't know
know,
why.
and that's the main concern for me. It doesn't feel as bad as it really is. Also, talking about treasuries and bonds, obviously, the biggest bond buyer in history is now out of the market. It's like the Fed and the central banks are no longer buying bonds. They're sort
Yeah,
of like unwinding their positions. So over the coming months, you're going to get them bond prices um, moving higher. The yields moving higher, the bond prices moving lower, looking for someone to step in and sort of like take it up. And so, you have got, that's definitely the interest rate is something that we've got to be watching. Interest rates are now a real live fluid situation where people can look at getting some really solid returns from almost we can't say it's completely risk-free, but pretty much that's what it is. It's a government-backed bond.
yeah,
So yeah, interesting times ahead. But yeah, so just wanted to sort of like highlight a few of those.
yeah. I mean, I think that's why I mentioned what I did about the S&P 500, and I don't feel we've had that capitulation move yet. That people
No,
are giving up because although things are pretty hard, it seems as though people are sort of hunkering down and just holding, which is,
mm,
I don't know whether it's right or wrong. We'll ultimately find out, but it just feels there needs to be this proper flush out of all that risk money that's tied up, and sadly that's going
yeah,
to mean lots of people lose money. But um, I don't think the market can turn until that's been done, really, until it's had a
no,
sort of reset effectively.
absolutely. We've seen plenty of times like this in the past. In my sort of like nearly 35 years of looking at markets, there's been situations similar to this. And you have to get that flush out first before the market resets, and you can start on the sort of like the growth story again, the trend higher. But it just feels like we're such a long way away from it, Joe.
I mean,
Um,
sadly, we probably get a correction at some point, which suckers in a few people to thinking
yeah,
it's the bottom. Then
yeah,
they get involved, and then we have the flush out after that.
yeah, I agree. I sort of think we're going to see the same in cryptos as well.
Yeah,
I,
hundred
I, I
percent.
think the market has taken this sort of like nosedive, and we'll get some sort of correction at some point with people get a little bit bounce off this 20,000, and then we'll get the real proper flush out, down to wherever the sort of like the real value is. I mean, around about the 14,000 level. I think even down as low as maybe 8 to 10,000, if not lower. It's sort of like it's frightening that the belief that people still have in, it always bounces. That is the problem. There's a lot of the market participants, especially the retail side of things, have always seen markets bounce. And I've seen lots and lots of times when markets haven't bounced until people are wiped out. So yeah, please be extra careful out there. Only risk what you can afford to risk. I'm not saying in sort of like 10 years time Bitcoin may be sort of like what people are talking about, but currently the demand's not there, and the belief in it is starting to wane. So we shall see.
Mm. So a bit doom and gloom for a Monday
Yeah,
there, but
yeah,
we're just telling it how it is based on what we see on the charts and based on the experience that we both got of being around markets for a long period of time. So hopefully it helps. And if anyone wants to reach out and have a conversation about any of these things, and if we can help in any way, then we will. Okay, let's move it on then to the next phase of the show, which is the gun to the head challenge. Now, again, I've misled people here this morning by saying there was 3 trade ideas to start the day, but of course, without Jamie, we're only going to have 2. So apologies for that. If you were tuning in for 3 trade ideas, you're only going to get 2, but hopefully that will be good enough. So let's just take a quick look at the trade ideas from last week. So the gun to the head trades, we pick a live idea on the video. We pick stops and targets. They must have risk reward ratios in excess of 2 to 1. We close them off at 9 o'clock UK time. And then obviously review these trade ideas the next day. And they're all posted to our TradingView account. So if anybody wants to check them out, they're all there with timestamps. We're not hiding anything. It's just a bit of fun, basically, on a daily basis. So, Steve, you went long of oil, which didn't work out,
yeah.
unfortunately, but obviously you had a stop in there, which means that you capped your losses, which is what we always do. Euro, US dollar, I went long of that. Started to look decent from the initially, but then it died, sadly. So no win there. So Jamie, who's not here to take the credit, I believe did have a winner.
Oh,
Oh no, he
nice.
didn't. He didn't.
Oh
He
no,
got stopped out.
no. Should have
3
had to stop a
trades,
bit higher.
3 losses, sadly, last week.
Not
So
good.
yeah, it happens. I mean, since we've started doing this, we've done many trades. Let me just see how many in total. That doesn't include Ian's as well, who was obviously part of this prior. So, I mean, we're talking nearly 1,800 trades.
Wow.
And we started off with a hypothetical £1,000 balance, and we're up at 2,380. Still actually off of the all-time highs that we reached. And Steve, actually, I saw you were at a new equity high, or very close to it on your overall performance. So,
Oh,
yeah, you're
you're
doing
trying
all
to put
right.
me off now, aren't you?
No, I'm not. You're catching me up.
Okay.
I just feel like I've been flatlining for ages.
Right. Okay. Well, yeah, I felt
That was your
like I had
equity
a
high.
good.
You hit 40,
Yeah,
40R. You were
yeah,
up.
that is nice. It's nice when you don't watch it and all of a sudden it's up there because always felt like I was getting to 32, 33R and just like getting smacked back down. So I think I had a couple of good days while you're away, and it's sort of like
That's
it's rolled on.
convenient, isn't it?
Yeah.
I need to go and check those.
Yeah, you have to check those. I'm going to look at gold mainly for the reasons top of the channel on the daily chart stalled at the top of this channel and reversed sharply from it. So we're off to, it's not really done a lot on the day to day. So I think further downside. I'm going to keep the stop pretty tight, have a $10 stop, getting short at 18.41. Targeting a move to 18.11, just in front of support at 18.05, and below that, remember 17.88. But yeah, so in a sort of like ideal world, maybe the stop would be better placed above 1860, but we're looking at an intraday trade idea, so we're sort of like trying to keep it quite reasonable, quite tight, and give it a shout of making the target as well. So 3-to-1 risk reward, selling gold at 1841, targeting 1811 with a stop at 1851. I'll publish that now.
Okay. You reeled that off so quickly. I haven't got really a chance to come up with.
As it take your time, mate. No pressure. No pressure. I'm
Well,
coming.
it
I'm
feels
coming
like.
for you.
Yeah, I know. Right, I'm going to take, sadly, for all you cryptocurrency enthusiasts, I'm going to
Oh,
be
you're
selling
not going to go
Bitcoin
against
today.
Bitcoin.
Yeah, I know you mentioned about it potentially rounding off a bit here on the intraday charts, and I do agree there is potential for that to occur. But given that we've seen a bit of a correction over the last few hours or so, I think we could be ready to turn lower again. Still think there's more to come on the downside. So my trade today will be to sell Bitcoin. It's currently at 19,942 according to the chart I've got here. I'm going to place a stop loss above this swing high that we posted around 11 o'clock yesterday evening, and that comes in at 20,837. And I'm going to target a move back down to these swing lows from the 18th of June at 17,586. Just a 2.5 hour return I'm looking for there on Bitcoin.
Lovely. Good luck with that.
Okay, so there's 2 trade ideas. Sorry, there's not 3, but there will be tomorrow when Jamie's back. In terms of data today, there are a couple of bits to keep an eye out for. Most notably, at 4 o'clock UK time, we've got the ECB President Christine Lagarde speaking. So no doubt she'll be discussing what they're going to do regarding interest rates and monetary policy across the Eurozone. And then overnight in the UK, or 1 a.m. UK time, we've got the Royal Bank of Australia Governor Lowe speaking. So again, more indications probably about monetary policy in Australia. Later this week, a couple of data points to keep an eye out for. On the 22nd of June, we've got the latest inflation read in the UK, and we've also got Fed Chair Powell congressional testimony. So a couple of bits to keep us on our toes a bit later on in the week. Okay, Steve, anything further to add?
No, that's all good from me, mate. I'm happy with that. Good luck with everyone
Perfect.
trading today.
Yes, absolutely. If you do want to follow those ideas we've just mentioned, they will be published to our TradingView account momentarily. Okay, until tomorrow then, guys, have a safe trading day, and yeah, catch you all tomorrow.
Yeah, cheers.
Bye-bye.